Good morning, ladies and gentlemen. My name is Greg Michalowski from Forexlive.com. Today's date is November 17th, 2022. It is Thursday. Does this week seem like it's going slow for you? It is for me. Anyway, let's take a look at some of the technical levels in play here for the major currency pairs. We'll start with the euro versus US dollar. Starting off with the daily chart here in the euro versus US dollar, what do we notice here? Well, we have this important swing area here between the 1.0348, 1.03657 level. Back here in the month of May, June, and July, the price bottomed against that area before breaking to the downside through here. Then we returned back to that area, found willing sellers against it. Once again, this led to the sharp move to the downside that saw the price bottom at the year's low at 0.9535 in the month of September before starting its rotation back to the upside. In trading last week, the price came up to that swing area once again, and guess what? We found willing sellers against that level, but then based not far from that level, near the 38.2% retracement of the move down from the 2022 high to the 2022 low. That was a nice hold right here, and the price moved higher, breaking above this swing area finally, and moving above the 200-day moving average as well. That break above the 200-day moving average was the first break above that moving average, going all the way back to this point right here. That's in June of 2021. But the break above could not be sustained. We see no closes above the 200-day moving average in trading on Tuesday or Wednesday, and today we're starting to move, or we moved further to the downside, breaking back below our swing area. So guess what? This area now becomes our resistance level, as does the 200-day moving average continue to be resistance on the top side for this currency pair. On the downside, the 38.2% retracement of the broken 38.2% retracement becomes the next support target, along with this swing area. The swing area defined by various levels through here, broke above it here, and then it became support right here. And then when we broke above it here, what do? We found support levels against it right here. So this level between 1.0273 and 1.029 or 83 is the target level on the downside. We also have 38.2%, just above the high of that swing area at 1.0384. So keep that level in mind in trading here today. If we move below this area right here, again down to 102.73, that would open the door for further selling pressure. But right now the buyers had their shot, folks. The buyers missed. Break above the 200-day moving average, key break. Couldn't sustain the momentum and move below this swing area. So the sellers are starting to take back a little bit more control, at least in the short term. Let's take a look at the dollar versus yen. And if we look at this currency pair, what do we see in trading here today? We see the price moving above its 100-day or 100-hour moving average. That is the blue line in this chart. And the price moved to the upside, so increased momentum, getting above this swing area through here, but falling short of the 100-day moving average up through here. Although it doesn't look like very far away, this is, the dollar versus yen has had some pretty big ranges. So this is 140.20. This is the 100-day moving average of 140.90. So it's about 70 pips from here to here, and the price got about halfway there and then started to rotate back to the downside. The rotation to the downside did find support against the 100-hour moving average. However, here on the downside, buyers leaned against this level after leaning against it right here and here, sort of. The price did see a little move back to the upside here with the increased dollar buying. So good support buying opportunity there in trading here in the dollar versus yen, right against the 100-hour moving average, push the price back higher. We're going to need to get above the 100-day moving average in order to push this pair higher. The price has been below that moving average since, well, this point, 1, 2, 3, 4. This is the 5th day below that moving average line with 5 closes below it. So we're going to need some more momentum, a kick to the upside here, get above that level too, and keep the buys going in that direction. This is what it looks like on the daily chart. The low price that we saw in trading earlier this week did find early buyers against the 38.2% retracement. That's of the 2022 trading range from that low to this high right here. So getting on the downside, if the 100-day moving average can hold support, traders got to think toward the 137.24 level, 38.2% retracement. That's the minimum retracement that the corrective move should go below if the sellers are to try to take more control. Right now, they couldn't do that. So the bias is more to the upside, but we need to get above that 100-day moving average. It's just the way it is, folks. Let's take a look at the sterling versus US dollar. We'll start by looking at the daily chart, and the like the dollar versus yen, is the retracement of the move down from the high to the low. The 50% retracement level comes in at the 120.499, and earlier this week the price moved up toward that level, could not get above it. We found willing sellers against that level right through here and kept a lid on the pair through it, and we started to rotate back to the downside. The move to the downside has now moved and is trading near the low of this swing area through here, with a number of different swing lows coming in play and some swing highs here as well. We broke above it in trading last week. Came up to the top side of the level through here, and then broke above it in trading this week, similar to what we saw in the euro versus US dollar. Let's move higher on Tuesday, but have rotated back to the downside. If we move back below the 1.1759 level, that would be more bearish on the daily chart here for the sterling versus US dollar. We'd have traders looking toward the 100-day moving average and broken 38.2% retracement at 1.6549. The dual technical levels there increase that level's importance going forward. That would be the target on the downside for the sterling versus US dollar. Taking a look at the 4-hour chart, we see, and let's take a look at the hour. Let's see if there's anything on the hourly chart here for the sterling versus US dollar. And we're kind of 38.2% retracement. The move up here is being tested at 117.62. Move below that level. That level is also corresponding with this swing level on the daily chart. So dual level near the lows for the sterling versus US dollar from a technical perspective. Finally, let's take a look at the dollar versus Canada. What I like about this currency pair is what happened in trading yesterday. Brought it up in a post, how the price had moved above the 100-hour moving average. We did waffle. It was a slow play for this currency pair above the 100-day moving average, but the market eventually started to move higher, got above the high price for the week, and then waffled again, and then moved up to the 38.2% retracement and near the high of this move. This is the 38.2, just of the last leg to the downside here for this currency pair, and we fell off again. But we did find support buyers once again against this area right here. If you eyeball the level, we have swing lows, some swing highs through here, swing highs, move above it and below it, above and below it, above and below it. Moved above it in trading yesterday, and we came down to it in trading today before bouncing off of that level and moving to the upside here for this currency pair, breaking above the 200-hour moving average, and now testing the 50% of the same move to the upside, same move to the downside here. So the trading risk for traders is a bias in the short term, at least, is to the upside with the 50% to get above that level. Watch the 200-hour moving average, close risk for that currency pair. So there you have it. Look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.